Okay, today's presentation says about the what's finance and what's the finance terms and about the finance aspects, assets, the finance resources, and some institutions of finance we'll learn about. Okay, let's start. Finance is study of how individual institutions, governments, business acquire and spend manage financial resources. Finance that explain us how to individual manage the money, how to individual ensure their life in order to protect against premature death, for example. Institutions, how to make the deal, how to make the deal with finance and monetary transactions such as loan or deposits, investment, and the government, business acquire and spend manage financial resources, assets. Finance actually is a broad term that tells us that the specific activities which is associated with the banking, leverage, debt, credit, capital market, money, investment. And when, in fact, both of them altogether make up the financial assets. Financial assets. The concept of there is one concept which is that shows us the time value of money, which is which plays important role in the finance because it can say us that dollar today is worth more than a dollar in the future. This money today uh, we can set up the company by devoting this money, or we can invest the money to get the profit return in the future. What's personal finance? Personal finance is study of how individuals prepare for financial emergency, protect against premature deaths and the property losses, and accumulate wealth. Personal finance that explain us that individuals, people, how to get ready for financial emergencies. That's because we have to protect against premature deaths. That we have to make insurance for our life, and we have the insurance for our protect property rights, and then to accumulate wealth. And the personal finance is a term that covers managing your money as well as saving and investing. It encompasses the budgeting and the banking, insurance, mortgages, investments, retirement planning, tax, estate planning. It often refers to the entire industry that provides financial service to individuals and households and advises them about financial and investment opportunities. In fact, personal finance is a terminology that that includes how to manage your money, how to manage your saving funds from the saving to investors, as well to we have as well to saving also the investing. Yes, it includes different types of concepts: budgeting, banking, insurance, mortgages, investment, retirement planning, tax, estate planning. It also refers to the entire industry that provides financial service to individual and household, advise them about financial and investment opportunities. For example, that the entire industry that can uh, provide that advisor, investor advisor, uh, or the planner that help us to make the financial decision to, for example, to invest or deposit the money. Personal finance includes purchasing of financial products such as credit card, insurance, mortgages, various types of investments. Banking is also considered a component of the personal finance, including checking, saving accounts, online or mobile payment services like PayPal or Venmo. Personal finance that consists in the purchase of financial products such as credit card or insurance, mortgages, various types of investments. Uh, for example, this as I mentioned just before, entire industry provides financial service. It can be insurance insurance service. For example, we have to that we have to make the insurance for our property losses. That can and the entire industry provides the service the person who can advise us and who can teach us how to make insurance. And banking also is considered finance, personal finance, because uh, we have to that saving open the saving accounts or online or mobile payment. It can be also personal finance. And the situation we have to make the finance decision, our daily life. What's the entrepreneurial finance? Entrepreneurial finance is a study of how growth-driven performance focused on early-stage firms raise financial capital and manage operations and assets. Entrepreneur finance is a study how the enterprise and a new enterprise growing fast, and how the enterprise performance is focused by entrepreneurial finance. And the early stage, this entrepreneur raise financial capital, how much capital they can produce or manufacture, and they manage operations and assets that resources of this firm or enterprises. So entrepreneur finance is a process of making financial decisions for new ventures. There, entrepreneur finance that assess enterprises to the early stage firms to make the financial decisions. Financial entrepreneurial finance is study of value and the resource allocation applied to new ventures. It addresses key questions which challenge all entrepreneurs. How much money how much money can and should be raised, when should it be raised, and from who? What's the reasonable value of the startup? How should founding, construct, and exit decisions should be structured? Entrepreneur finance is a teach us, as a teach for new ventures, how to make the value of value and the resource allocations when we set up our company or our set up our own business as small as we can. And uh, and uh, all of the entrepreneurs um, uh, have to make sure how much money they can spend, and after short term or long term period it can be returned how much will be. So when should be rise from whom? Maybe they can contract with someone or with a partner who can that purchase while that entrepreneur sells that capital products, I think. And what is the distinguish between businessman and entrepreneur? Businessman, this is someone who makes his place in the market with his efforts and dedication. Whereas, in contrast, the entrepreneur creates the market for his own business, and the businessman is a market player, while entrepreneur is a market leader because he's a first start, such as kind of enterprise. Businessman walks on the defined path, but the entrepreneur believes in making his own path, which becomes the guideline for other businessmen. The difference between the businessman and entrepreneur, that businessman is someone that makes his own place. An entrepreneur is creates the market for his own business. It is different between them. What is financial environment? Financial environment is financial system, institutions, market, businesses, individuals, global interaction that help the economy operate efficiency. Financial environment is actually a term, a part of the economy, which consists of big players, such as for the institutions, that individuals, global interaction that help the economy, that all of them all together make the economy operate efficiency. For example, the institution markets that investors will be the big players. Uh, Also that they can the economy make operate efficiency. The financial environment is a part of the economy which with major players will being firms, investors, marketers, especially this sector can represent a large part of the well-developed economy as individuals who retain private property have the ability to grow their capital. Firms are any business that offer goods and services to consumers. Investors, individual or businesses that place capital into the business for financial returns. The market represents the financial environment that makes his all possible. Financial environment as a part of the economy, with major players being firms that, as I said, investors, how they will uh, invest, or the like the bond that lender that loans, lending the bonds with established interest rate, and then in the future it can be return profit they can get. And the market, and especially this sector can represent large part of the well-developed economy. As a result that economy that operate efficiency, uh, and the firms also in a business and offer goods and services to consumers. Firms and provide the goods and manufacture the goods which the consumer need to consume, and the services to help the consumers to make the financial decisions. Investors that invest the money, and in the future it can get the profit. And the business and that can place capital into business for financial returns. As I said, market represent the financial environment that makes this all possible. What is the financial institutions? Financial institution is the intermediaries that help the financial system operate efficiently and transfer funds from the server to individuals. Businesses and the governments take the seek to invest and spend the funds. Financial institutions as a department, as an intermediary that assess the uh, uh, that assess the money. This assess the for example, the money from the server to individual, and the business government in order to look for the spend and invest the funds. For example, the bank acts as an intermediary that between retail and institutional investor who supply the funds through the deposit, and the retail and institutional investors who are looking for the financing. The bank pays a 2% interest rate on the deposit, which can accept from the household, and the business from the interest rate earned from the lending service. And in addition, the bank offers fund management and health and the life insurance services, so it's subsidiaries. Financial institution as a intermediaries uh, uh, which which controls the supply of money through deposits, deposit or retail institution investors that who are looking for the financing. For example, the bank, the actors as intermediaries between retail and institution investors, and the bank pays 2% interest rate when the depositor deposit the money and which accept from the household businesses from the interest rate earned from the lending services. In addition, the bank offers fund management and manage and how to manage the fund and health and the life insurance service through its subsidiaries. What is a financial market? Financial market is a location or electronic forms that facilitate and the flow of funds among the investors and the businesses and the governments. Financial markets, I mean that it doesn't it doesn't have physical location, and because it can conduct it electronically every types of trade, it can facilitate, make it easy to it, and the flow of funds among investors, businesses, governments. Financial market uh, refers the huge and a marketplace where the trading trading exchanging of securities occurs, including stock market, bond market, forex market, derivatives market, and among others. Financial markets are vital to the smooth operation of capital's economy. Financial market, the place which the marketplace in which the trading of securities occurs, and the stock market, which includes the stock market and the bond market and forex market, and in addition the derivatives market, among others. The financial markets and this such a department which make it easy for buyers and sellers to trade their financial holdings. Financial markets create the securities product to provide the return for those who have access to funds, the investors and the lenders, and makes these funds available to those who need the additional money, borrowers, and then uh, which the funds available to those who need the additional money, borrowers, with of course established interest rate, which can the investor or lender can get return the profit of interest rate. What is investment? Okay, investment involves the sale and the marketing of securities, the analysis of securities, and the management of investment risks through portfolio diversification. The the investments include the sale and the marketing securities, and the analysis of securities, and the management of investment risks through portfolio diversification. Make sure the seller to sell the bond, the stocks, and the marketplace, which and analyze these securities and organize everything, organize the investment risks through portfolio diversification. In the financial sense, this includes the purchase of bonds, stocks, real estate property, among several others. In finance, investment is a monetary asset, which purchase the idea that the resources of this investment, which provide income in the future, will later be sold at a higher price for profit. For example, uh, it's from a perspective, the stocks, for example, and among the countries, some an accident happened, and then this the country buy the stocks, and the other stocks is a cheap price, and then when the accidents at the end, and there's everything is okay. Just the country will buy the stock, will sell it this stock, not buy. They sell its stocks and it's higher price, and then they get the get the profit, much more profit in this country. This also investment is also asset of the investment, concept of the investment. What is financial management? Financial management involves financial planning, asset management, and the fund-raising decision to enhance the value of business. Financial financial management the first make sure how to planning, organizing, and directing, and as well as to controlling the financial activities. Which activities, which is procurement, utilization of fund to enterprise, uh, analyzing, planning, organizing, analyzing, and operating the 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 financial activities such as procurement, utilization of fund of enterprise. It means that apply general management principle of financial resources of the enterprise. There are six of foundation principle that can be used to study finance. There are six foundation principle which we can use to study finance. That be aware of the about this principle, that of course they can assess us to understand about how managers, investors, and incorporate time, the risk into their financial decisions, as well as to turn access to turn the giving the value, how to they can make the financial decisions, how to the face the risks while they're that's making the decisions, and for example investing, and this after such a period of time they get returns, but which include some of the risks that it says about us. Thanks for your attention.